right, Sensex and the Nifty ended Friday and the week with marginal losses. It has been a cautious start to the new year across stock markets worldwide. Financial stocks continue to see profit booking, but there is no stopping the mid-cap rally as it continues to buck the downtrend. Hello and welcome to the Editors Roundtable. On today's edition, we put the spotlight on many issues actually. Healthcare is one. We'll tell you whether it's time to exercise caution on Dalal Street. That's not all. We'll also look at the surge in Demat accounts, record highs there, and key stocks to watch out for next week. I'm Sonia, and joining me today are Nimesh, Nigel and Ekta. Folks, this week felt like a bit of a roller coaster, right? One up day, one down day. But by the end of the week, it sort of evened out.
Well, I think sanity prevailed, right, after a while, because 2 months we were just running in one direction. After a long time, people are asking, will the markets correct, will it not? So I think it's healthy, right? After the kind of run that you've seen, some question marks.
It's relatively light as well, right? I mean, now the FI flows have resumed. Larger guys have started participating. I think next week will be important also because there will be allocations, fresh allocations for this year.
Yes.
And India could potentially stand out as well. So I think that is something which a lot of people have been looking forward to from an event point of view on what India gets allocated in terms of in terms of GM, in terms of global flows, and how much that can have an impact on India. So that's something will be a very important trigger to track. But as you rightly pointed out, Sonia, roller coaster ride, but the mid caps continue to outperform. That's been in a different zone altogether. I guess there is a bit of caution out there. One needs to be careful about the rally in the mid cap and small cap. But who are we to say? There is liquidity, so the party can continue.
Absolutely. I think the mid caps, they rallied, 2.5% this week, second consecutive day, week of gains. But what stood out was a lot of themes which played out as well. So, for example, the entire Adani space did see a lot of momentum. We saw defense, which was higher this time round. We had IT, which rallied towards the end of the week.
So this week was technically a week where every day we got one sector to play, right?
Yeah.
One sector took a
Real
leadership.
estate.
And real estate did one. I mean, without any news, you've seen real estate doing good, you've seen defense stocks doing good. One day it was IT, one day it was NBFCs. For no reason, the NBFCs rallied 7, 8, 10%, right? So that's the kind of week, right? I mean, on the index, you may not find too much of moves, but within the sectors, there was a lot of action going on in the individual names.
Let's just wrap up what happened in the week, right? The mother market was looking a little bit jittery, and the US markets, they started off the year on a somber note, really. When is the last time we've seen the Nasdaq lose 5 straight sessions? Well, we haven't seen that in the last 15 odd months or so. A bit of a somber note is what we saw the US market start off on. What are the factors that are worrying the US markets in particular? One is the mega cap stocks. Well, they are trading at very elevated valuations. Point number one. Point number two is, after a while, you're questioning, will the Fed cut? If yes, by how much will they cut and when will they cut? So the question marks in terms of the Fed action, that's another, talking point for the past week. And this Red Sea conflict is getting a little bit worrying. Will it affect, trade for a longer period? That's going to be a bit of an issue for the global economies as well. How do the Indian markets fare? It appears in the near term we're in this band of around 350, 400 points, 21,500, which we saw this week, and 21,850, which we also saw this week. So that brought 350-point rally. The Nifty Bank, that's been the one that's really swinging the Nifty. On the day, it has a good day. You have sectors that perform. But when the Nifty Bank has a good day, the Nifty has a good day. Because the IT index has been off color, though on Friday it did come back. So the Nifty Bank has really been the one that's been moving the index around, particularly since the global markets are in a bit of a tizzy. Mid and small caps, that outperformance continues. Everyone's throwing caution out there. The bulls are saying, no, we still like the mid and the small cap space, and they continue to outperform. And this week, 2 sectors did very well. They started 2024 off the blocks in style. Realty as well as pharma, both of them did quite well. We spoke to a lot of market men, right, all through the week. And I think the broad, consensus is that 2024 expect not as good returns on the headline index as 2023. So maybe it'll be a little bit of an underperformance in comparison to 2023. The Nifty Bank, well, that's been one of the banking names, it's consensus that people want to invest with there because of earnings as well as valuations. And also there is this consensus that large caps will do better than mid caps at current reckoning. So that's the broad pointers. What are we looking forward to in the next week? Earnings, that's going to be important. Fresh allocation, that's something that we're looking at as well. And any kind of US data that's coming out of there and how the street reacts out there. So that's going to be important. So that's basically the way I see trade setup. But Nimesh, what about dealing rooms?
So, Nigel, you spoke about the mid cap and small cap largely outperforming this week as well after a big outperformance in 2023. And one of the reasons that I could attribute to is in the month of December, towards the end of December, couple of small and mid cap fund NFOs were launched. So they raised a lot of money in that NFO. So that's getting deployed in the mid and small cap. That's one explanation to explain why the mid cap index rallied another 2.5% in this week. So that's one thing. The other thing was the real estate sector. The sector itself in a single week rallied more than 6%. The individual stocks rallied between 8, 10 and 14%. A couple of reasons. One, there was a technical factor that the index had broken 14-year high, and none of the stocks yet had broken the 14-year high. So you're doing a bit of catch-up in the index as well from an individual stocks perspective in the real estate name. And the second is it's a theme on the hope that there will be rate cuts globally as well as in India. So rate sensitives overall should do well in 2024 if you believe that there's going to be a rate cut in the US as well as in India market. So I think that's the reason why you've seen a bit of a catch-up in the real estate names this week. Again, the big leadership seems to be with the PSUs. Every sector, there is a rotation going on, but the PSUs as a theme continues to outperform. This week also we saw power PSUs doing good. Defense PSUs were buzzing as well. So PSU seems to be the leader of this bull market. So that trend will likely to continue. But from this week perspective, the rally in real estate was largely a technical rally because of the breakouts and the fact that now people are chasing the rate sensitives.
Okay, in fact, Harish Bihani of Kotak is with us to give us, of Kotak Mutual Fund rather, to give us his view on all that transpired. Harish, very interesting times in the market, right? There's one camp that believes that perhaps we need to get a bit cautious, but then the other believes that things are going great and there's no such bad news on the horizon. Which side of the fence are you leaning on, and what is the prognosis now?
Thanks, Sonia. As you rightly pointed out, it's very easy to be bullish or cautious at this point in time. It's easy to be bullish given that a new business cycle is emerging. You look at the capex cycle, you look at the real estate cycle, these are moving in the right direction. You look at the overall net debt in the system, that is low. You look at the net NPL, that is clearly low. And you look at friendshoring happening all across. That's clearly in terms of MNC companies coming and setting up shop here in India. Again, that is in the right direction. There's a lot of second order and third order benefits or impacts of all these, which we are yet to see, which makes one bullish. That said, when you think about, on the other hand, you become slightly more cautious given how ebullient the markets are, market participants are, how the IPO market is behaving, how the SME market is behaving. You get a little cautious given the behavior of the overall market, especially the small cap, mid cap, micro cap, SMEs, how they have been behaving over the last few weeks and months. It's important to recall that the very fact that things are stable leads to a lot of rational participants, a lot of smart participants bidding the prices up, which eventually leads to instability. So stability is destabilizing. In other words, calm plants the seeds of crazy, and that always has happened and always will. So in that context, we'll have to move forward, but with caution. On average, given positive outweigh the negative at this point in time, and that is why I'm saying that we'll have to move ahead, but with caution.
Okay. All right. Harish, thanks for joining and good to hear your comments. Harish, request you to just stay with us. You know, you said that it was easier to be bullish than cautious in this sort of a market, but Nimesh has put down some data points and we need to take that on board, right? Because caution is never bad. Nimesh, tell us what all have you noted out?
So, Nigel, in this kind of an environment where everything is it looks so good, the index are at all-time highs, we're seeing record inflows from the domestic mutual funds. Suna is going to put out a piece on how the Demat accounts are at record levels as well. So I thought, let's look at some realistic data and show as to why one needs to be a bit cautious as well. I'll just read a couple of important data to just justify as to why a word of caution is required at this point in time. The first, I think you were not there last week, but we put out a piece that January typically is a month which is lightly on the lower side. Out of 15 years, 9 years or 10 years, January
out of 17, 11.
So that's one thing that January historically has been a weak month. And this you need to put into context that November and December were very, very strong for Indian equities. We've actually outperformed virtually all the world indices in last 2 months. So, the January is a weak month, but on the fact that we've rallied also very hard. So that is something we need to take into account. Yesterday, 11 stocks were in F&O ban. And last I was checking that data in September of this year, when 12 stocks were in F&O ban. After that, in 1 month, the Nifty corrected 7%. Okay, so that also gives an indication that maybe it's getting a little bit overbought and euphoric from a F&O positioning as well. in terms of valuation, in terms of sentiment, we are at the peak, right? The markets are at peak in terms of sentiment as well as valuation. I'll just put a word on the valuation. At 20 times or little over 20 times on Nifty for forward PE, after that, it's only been 8% that we've rallied higher in that particular month or in a very short period of time. So typically after that level, you see a bit of correction in the market. So that's again another sign. Even if you look at Nifty versus, in terms of equity versus bond market, the equity premium is at a much higher level compared to the bond yields. So either bond yield has to rally pretty hard, or we have to correct. Equity has to correct. So even that is not giving a very, very positive sign. The CLSA Nifty Bull Bear Index is at a 95% on the bull side. Okay, that also shows that the retail sentiment is so much bullish. Everybody only feels that market is only going to go up. So that again, from a position point of view, is not something good for the Indian markets. Even in terms of India's own market valuation versus history, we are at the record highs, and we are actually, among the most performing markets, best performing markets among the 19 countries globally. Even that gives you a sign that maybe we are a bit overstretched in terms of valuations. Historically, in the year of elections, normally India does well. But again, the feedback is that to some extent, market has already priced in the third term for Mr. Modi. Yes. And hence, even from that perspective, you may not see big upside, even if that event has to play out from an equity point of view. So that again is a bit of a thing to watch out for. And lastly, I was reading a note from GM's technical analyst. He feels that this is a suckers rally. And this is very much visible this week, right? Every day we saw one sector doing good and stock rallying 8-10% without any reasons and without justification. So that's a kind of a suckers rally, which might suck a lot of people on the wrong side, and then it may collapse. So these are the 7, 8, 10 odd points, which do indicate that while everything looks good and hunky-dory, one needs to look at data and one needs to bit caution from a near-term trading perspective.
Okay, well, that's very important actually. That caution is much needed, especially at a time when things are looking euphoric. But Ekta, you've got an update for us on the pharma sector. Take it away.
Yes, absolutely. In fact, the Nifty Pharma Index gained around 3% this week. It was one of the key indices which did see some amount of action earlier in the week. Now, what exactly is the 2024 outlook for the pharmaceutical space, considering that there is so much of bullishness around that space? Now, I'll start with IIFL's view. They believe that there will be an improved price pressure in the US. It may not sustain beyond 1 year. In fact, according to them, the companies which are also focused on one-off large opportunities in the US might see some amount of earnings volatility. They seem to be more sanguine about the domestic market in India. So, for example, the domestic Indian companies are clocking 9 to 10% growth at this point in time. Most of the mid-cap pharma companies, in fact, continue to outperform the Indian pharma market by around 300 to 400 basis points. So, they do expect maybe some amount of resilience there. Now, coming to Bernstein, they've written on the pharmaceutical space as well. 2024 may be a year to take a breather, according to them. Stock picking is paramount. Remember that the Nifty Pharma Index or the pharmaceutical index did outperform the Nifty last year. US generic pricing, according to them, could remain favorable. Revlimid generic remains a cash cow for many companies, so that's expected to continue this year. Indian volume growth is improving as many of the Indian pharmaceutical companies are expanding their sales force. Now, they are a bit cautious because India and US will be holding their elections, so history says that it doesn't fare well for Indian companies, pharmaceutical companies during this time. The other big opportunity rather to watch out for, according to them, still continues to be GLP-1 inhibitors, which is, the diabetes and weight loss drugs such as Wegovy, Ozempic. They believe it's a huge opportunity. Cipla, Lupin could be beneficiaries. IIFL, these are a couple of their top picks. Mankind, JB Pharma, which are domestic-focused companies, Sun Pharma, Aurobindo. They are cautious on a couple of these companies. Their top sell ideas are Divi's as well as Dr. Reddy's. For Bernstein, they don't see much upside going forward in terms of multiples expansion. And, Bernstein should come up for you. These are the target prices for IIFL. Cipla, Biocon, Gland Pharma, Sun Pharma are their top picks going into 2024. Now, I just want to end by talking about, Bain's view on the pharmaceutical space, because they believe that across regions, investors will keep a few common themes in mind, which is generative AI, which is expected to be transformative when it comes to healthcare. Also, they also do expect maybe a lot of focus on the GLP to one class of medications. Again, I'm talking about that entire space because that seems to be one big focus area going forward. Also, big tech companies partnering with healthcare companies would be something that we would watch out for. This is on a larger scale, but this could be a theme that could play out for Indian pharma companies as well. Harish, we've been talking to you about multiple sectors, but pharmaceuticals and healthcare, what is your sense? Do you think that that would be a sector that would see outperformance or maybe some amount of consolidation in 2024?
Sure, Ekta. So if you look at the pharma sector, it's a fairly wide range of participating companies in the sector. You have US generic, domestic pharma companies, domestic focused pharma companies, you have hospital diagnostics. What we think is that domestic focused companies, some of the hospital companies, some of the diagnostic companies could continue to do well over the next many years to come. This is largely because as India transitions from a $3.5 to a $10 trillion economy, a lot of these companies will gain market share, especially from the unorganized players in the hospital space, in the diagnostic space, and some part of even the pharma value chain. So we remain bullish. That said, given the recent run-up, there are pointers which points to taking a much more cautious view and to be much more selective amongst all the names that you pointed out.
All right, thanks a lot for that. Well, the other big headline was the number of Demat accounts that opened in the month of December, and that hit a record high. The numbers are 41.78 lakh Demat accounts, so almost 42 lakh Demat accounts were opened in December. Now, if you compare this, in November, there were 21.7 lakh Demat accounts, and this is the highest ever monthly addition that we've seen. And the total Demat accounts now in India, right, have gone up 28% year on year, standing at a little under 14 crores. Now, what is the reason for this big spike in Demat accounts? A couple of things. Of course, economic progress. We've seen the kind of pickup in corporate earnings across the board. We've had a buzzing primary market. So this whole IPO hype has caused the number of Demat accounts to go up as well. The upcoming elections, where the expectation is that there could be a decisive NDA mandate for the third time in a row, and that could ensure further policy continuity, and hence people, want to capitalize on that, and hence more Demat accounts and involvement in the market. Also, there are hopes of the Fed rates cuts coming soon, and that could perhaps spur the market. But let me tell you that this theme of financialization of savings, there's still a long way to go. You may think that there are now 14 crore Demat accounts, but just look at the size, right? There are 144 crore Indians and only 14 crore Demat accounts. So less than 10% of the Indian population has a financialization of their savings. Most of their savings and physical assets. So this is still a long-term story that could play out. Let's step into a quick break. We'll pose this question to Harish on the other side of the break. We'll also tell you about the key stocks that you need to watch out for as we head into the next week.
Welcome back. Well, we have a busy week ahead of us in terms of key events to watch out for, and one of them will be a lot of stocks in focus on account of earnings and other events. Sonia, tell us more.
So I'm watching out for 3 stocks. There are so many in focus next week, but Infosys, TCS, of course, on the back of earnings. They come out with earnings on the 11th of Jan, which is Thursday. Now, this time around, the numbers are expected to be on the weaker side. So Morgan Stanley put out a note where they said that Infy's revenues will fall by 2% quarter on quarter. There will be pressure on margins as well because 2 months of a salary hike was combined in this particular quarter. So margins will be under pressure. However, the big question is, will Infosys tighten its guided range of revenue growth from 1 to 2.5% to 1.5 to 2%. But here's the thing, right? The street is expecting some positive surprise because the stocks have gone up. In the last 1 month, in the last 1 week, stocks, both Infy and TCS are up and about. Even for TCS, actually, Q3 could be a seasonally weak quarter. But the big question is, will Q3 results offer some hope of a revival in FY24? So in that context, the commentary is important. There are other numbers as well. There's Wipro, there's HCL Tech. The other stock that I'm watching is Samvardhan Motherson International. Now, this is, a bit on the speculative side, so just be a bit cautious here. But we have the Vibrant Gujarat Summit next week, and there are talks that Elon Musk could attend that summit. There's no confirmation on that, but Motherson is a supplier to Tesla. Small supplier, but supplier nevertheless. And Commerce Minister Piyush Goyal has in the past said that Tesla is looking to source more production from India. So any buzz on that, any talk on that could get that stock active. But I want to get to Harish on the IT space because next week you have earnings. Harish, how are you positioned here? Are you expecting any positive surprise?
No, it seems highly unlikely that there'll be any positive surprise, Sonia, in this particular sector. We are still not out of the woods. Markets are looking ahead of the near-term numbers and thinking through of how this entire space will look like 3 quarters, 4 quarters out. It's still very difficult in my understanding. There are too many variables to forecast, especially on US macro and how that will play out over the next calendar year or this calendar year. And in that context, one needs to build their position gradually in this sector. Within this sector, there are fairly interesting ideas that have done well in an upcycle and in a down cycle. We are positioned significantly over there. And also looking at some of the larger caps that have underperformed. I would watch out for the commentary of the management in the upcoming quarterly calls to understand how things will shape up over the next few quarters and years.
Okay, Harish, we'll leave it at that. Thanks a lot for joining in. Have a great weekend. And that's curtains down on another episode of Editors Roundtable. Thanks a lot for watching. Have a good one.